talking about that Kentucky Derby win with Brandon Kern. He's the Senior Director of State and National Policy with Ohio Farm Bureau. I'm Ty Higgins. Well, I love an underdog story.
Oh, man.
That was really something to see, wasn't it?
Did you see how far he came from behind? I mean, he was in the back of the pack the whole race. And I don't even think he was in the field, right?
No.
He was in the field until the Friday before the race.
He drove like you do in traffic. He just kind of zigzagged his way through.
Hey, listen, in rush hour, you got to do what you got to do to get ahead. So that was amazing. But I got to say, my style is a little more Ohio-centric. So
yeah.
I'm more of a fan of like the little brown jug.
Yes,
right?
yes.
So, where the Kentucky Derbies, all the fancy hats and flashy colors and people sipping mint juleps, right?
Yeah.
Right. Ohio, our version of that is the little brown jug, and that's I picture Ohioans with Ohio State 3/4 zip, jackets on, sipping on a Budweiser, right? Watching harness racing, which is a little more my style. But what an exciting race that was.
You'd look good in a derby hat, though. You really would. A lot to talk about here. We're going to be doing this once a month. It's the Ohio Farm Bureau Policy Points Update, and there's always so much to talk about at here in Columbus, the state level, but also at the federal level. And we got through a major primary here in the Buckeye State. Got some results in to kind of set the stage for November and some of those elections, but we're not done yet. Usually after a primary, I think, finally, no more of those commercials to watch on TV, but they're going to be coming back pretty soon because we have part 2 of the Ohio primary coming up. Why, and talk about what to look for as far as that second primary is concerned.
Yeah, it's a wild election year this year in Ohio for a couple of different reasons. So we have this split primary format due to some of the delays in the redistricting process. And that has created the need to have one primary, which we just got through. So the May 3rd primary, where all the statewide elected offices and our congressional members were on the ballot in their primary. But the state legislative districts, the folks who occupy this building behind us, still going through a court process to firmly establish what their districts are going to look like. And that has moved what is most likely to be a second primary held here in Ohio for those state legislative districts, probably in August. And so we have the results of the statewide process here. So, the highlights there, obviously, our sitting Governor Mike DeWine was renominated to represent his party. He's going to be matching up against Nan Whaley, who's the former mayor of Dayton. In that matchup, on our congressional districts, we'll have 2 open seats this year in our congressional districts in Ohio. So there'll be a matchup against Max Miller, who's a former White House staffer in the Trump administration. And he's going to be going up against Matthew Deemer, and that's in the Ohio 7th District. In the 13th District, we have Amelia Sykes, who is a former state representative here, going up against Madison Jessiotto Gilbert. And so that will be an interesting matchup in Ohio 13. And of course, our U.S. Senate race, which got real interesting at the end of that race. Former President Trump came in and endorsed J.D. Vance. It looked like it gave Mr. Vance a little bit of momentum going into that election, and he pulled out a very close race in that primary. He's going to be going up against Tim Ryan, a longtime congressman here in Ohio. So we have an idea what those statewide matchups look like. Of course, Secretary of State, Treasurer, Auditor of State, and of course we have Supreme Court races, which are very, very important. I think the agriculture this year, we're going to spend a lot of time talking about those Supreme Court races on the ballot this year. So all those races for the general election are set. Now we get to do it again with our state legislative districts. We expect again that to take place, the primary to take place in August, and then a quick turnaround because they'll be on the ballot for the general election in November for those races.
What's that do for your preparation? Because usually we get this all done in one primary and we're able to work ahead and designate our friends of agriculture here in Ohio. What does this mean for your shop to have this primary pushed back and have that quick turnaround from August to October?
It wreaks havoc. It wreaks havoc. I mean, you think about the window of time we have, if one of our processes, any of those open seats in the state legislature, we have a local screening committee that's formed from local leaders in the counties that make up that legislative district to screen the candidates of both parties and help make a decision about who we designate as a friend of agriculture, for example. Generally, we have from this time through the summer to get those screening done, get the decision made, and of course we publish an election guide for our membership. You reduce that window from May to August, so you had from May to November to get all that process done. We now have from August to November to get that process done. So we're going to have to hustle for sure, but we will get it done. Our local leaders are dedicated to this process. We've been talking to our organization directors out there, our field staff, who help organize these things and helping get things prepped ahead of time. We'll get it done, and our members can expect to have an election guide just like they always do, but it will be, we'll have to hustle to get it done.
Bottom line, you'll be ready come November when you hit that poll and vote on all those major races across Ohio and for the U.S. candidates as well. Here in Columbus, although not as busy as maybe last year was with the things we had on our plate that we got done, everything done through the budget, we're still getting some things done here this year. House Bill 95 being one of them.
Yeah.
That's the new and beginning farmer tax credit program, something we've been working on since 2019. And now it has been signed by Governor DeWine. Really bridges that gap between farmers aging out of agriculture and those coming in, giving tax incentives to both sides of that equation. What's next? Implementation, of course. What are we learning as far as that goes? When can we expect to actually see House Bill 95 at work?
Yeah, so House Bill 95, sponsored by a great friend of agriculture, Susan Manchester, State Representative Susan Manchester. I have to add that. Finally got to the finish line. We're really excited about it. It will take a little bit of time. This is a new program that you have to stand up. It's going to have to be coordination between the Department of Agriculture, the Department of Taxation on the tax credit side. Also, that bill authorizes for the young farmers taking the financial training courses. It allows our universities to be involved, so our land grant universities to be involved as well. So Ohio State, for example, I think has interest in providing training under that. So that bill becomes effective. Remember, every bill has a 90-day effective date. So in July, that bill will become effective. The process, though, to start to put in place the components of the program are taking place now. Our team had a meeting with some folks at the Department of Agriculture and from the university just last week to start to talk about how this will be implemented and some of the considerations that should be made as that program stood up. So I think by late summer, we should be able to see a program take formation and be stood up for those young farmers, which is great.
E15 also being talked about here in Columbus and around the state. I know personally I fill up my truck with that blue hose, that unleaded 88. It's E15, got ethanol in it blended at a higher level. My truck's able to run on that. Many vehicles, in fact 2001 and newer, are able to run on E15. There's an issue though with having that availability year-round, and we, along with our friends with Ohio Corn and Wheat and the Ohio Ethanol Coalition, writing a letter to Governor DeWine saying what?
Yep. So what we've asked the governor to do is to account for kind of an outdated federal regulatory restriction on the volatility of that gasoline, blended gasoline. And so what happens when what the petroleum makers do to make E15 or E10 is they just take that base gasoline, your 87 unleaded octane, and they blend in the ethanol into it, right? When that happens, there's a chemical reaction that basically increases the volatility and therefore the evaporative rate of that gas, that product, that blended product. In the original Clean Air Act at the federal level, when E10 was first rolled out, they created a waiver, some flexibility in that to allow for that volatility and greater evaporative pressure, but that was not extended to the E15 blend, so it only applies to the E10 blend. What we've asked the governor to do is there is a process that states can request per the executive branch, per the governor, to ask the federal government to put E10 and E15 on equal footing so that volatility rate is the same for both of those blends. And what we think will happen then for the petroleum makers, there's certainly an economic incentive, we think, to continue to offer E15, but it's not there in the summertime when this regulatory restriction over evaporation kicks into place. So by putting those two products on equal footing with the amount of volatility that's allowed in those products, we think that E15 will be able to compete more, the economics are there, and the petroleum makers then will continue to offer E15. So we have relief from E15, from that E15 regulation this summer at the federal level. So the Biden administration has provided temporary relief just 1 year for this summer. What we're looking for and what we're asking the governor to do is to take steps to help make sure this continues in the future. So it takes 1 year from the time the request comes in for that flexibility to kick in. And so what we're doing is asking the governor to take action this summer so that for the driving season next summer, we continue to have that stability within that product. So it's really important. So we're asking the governor to take a close look at his ability to do that for us.
In our mission statement at Ohio Farm Bureau, we talk about strengthening our communities, and that's something that a new plan called Ohio Builds does. Governor Mike DeWine has put into place, mostly for the southeastern part of the state. Talk about what Ohio Builds does.
Yeah, so Ohio Builds, a recent announcement is building off of this program that the governor really had started last year, and it is an investment in communities across the state. For example, one of the things that Ohio Builds did in 2021 is invest a lot in water infrastructure, for example. So you think about small communities and the struggles they have with their drinking water systems or sewer systems. Ohio Builds made a significant investment in those systems. The governor just announced last week a new fusion of resources into that program, specifically targeted at the Appalachian counties in the state. And what the governor has said is he wants this $500 million fund to look at is small community revitalization, so downtown revitalization in some of these small communities in the Appalachian region. Economic development, of course, and workforce in particular. Enhancing the workforce in some of these small communities. I think that revolves around broadband and a whole host of things to help workforce training so that people can stay in those communities they love to live in, to find good paying jobs in those communities as well. So we're really interested to work with the governor's office on promoting this idea. Communities can apply for this funding in the coming year, and I think it's going to be a great investment in that part of the state, which a lot of times gets overlooked. Let's be frank about it. They tend to get overlooked, and it's an exciting initiative targeted towards that region that could really use it.
Moving from here to Columbus to Washington, D.C., we have a lot of acronyms that we keep our eye on almost every day when it comes to USDA or EPA or FDA, but there's a new one in town that we are getting more and more familiar with as they try to get their way into agriculture, and that's the SEC.
Yeah, the Southeastern Conference. I
don't
know
those guys. Nothing
They're
about
full,
Nick Saban.
I mean, they think their football teams are so great, but the SEC is just no.
It's a different type of SEC.
The other one.
Yes.
The other one.
Yeah.
The Securities and Exchange Commission.
How are they getting involved in agriculture, and why are we so concerned about it?
Well, not in a good way from our perspective. So the SEC has a new rulemaking, a new proposal out there that would require publicly traded companies to disclose the risks associated with and their own personal greenhouse gas emissions. And why that might not sound so bad in the era we're in and what we know about greenhouse gases and that type of thing. Where the problem comes in is the scope of what they're talking about doing. Because they want publicly traded companies not only to disclose their own personal greenhouse gas emissions from their processes, but there's a whole different tiers that they want them to disclose. So their direct actions, what their direct processes impact on climate, what their energy producers. So there's a different tier of this proposal is to disclose what their energy producers that supply them energy have, what kind of impact they have on climate and greenhouse gas emissions. And then the really scary one for us is what they were calling Scope 3 emissions, which is the entire supply chain. And of course, for us, we are the supply chain for a lot of those publicly traded companies. And, we think this is a significant overreach by the SEC. They don't really have standing to do it. It has the potential to create substantial costs and liabilities for producers, way down the supply chain that aren't publicly traded companies, by the way. But those publicly traded companies are going to be coming to their supply chain asking for this information. The problem for farmers in this is that farmers don't employ a whole team of lawyers and compliance officers like these publicly traded companies do just to focus on keeping them out of trouble with the SEC. And so if you're not able to provide that information easily, or you don't meet the standards that those publicly traded companies feel like they need to for them to stay out of hot water with the SEC, what does that start to disqualify producers from being able to supply that publicly traded company? And so there's one of our concerns is the lack of specifics in this proposal. It's really unclear to us what the intention is, how far down the supply chain goes. I mean, does a farmer have to account for every gallon of gasoline they put into every piece of equipment, every gallon of diesel they put into equipment, and what the emissions are associated with running and operating those pieces of equipment? We don't know, but it certainly looks like that could be a potential, and that's a large overreach, we think.
They say the devil's in the details. Well, this document's over 500 pages long, and they gave us a short comment period. Luckily, though, we did find out the SEC did extend that comment period, giving Farm Bureau more time to look through this and figure out exactly how our producers might be impacted by these moves from the SEC if this were to move forward. We got to talk about what's happening in Ukraine. It obviously is putting pressure on food supply, on supply chain as a whole. And there are a lot of people around the world that have their eye on the U.S. farmer and American agriculture to fill the void that might be coming from what we're not seeing produced in Ukraine because of the conflict with Russia. A new domestic food production program being, thought about in Washington by the Biden administration. What do you know about that? And are we going to be seeing some incentives for farmers to plant more of those products that we need across the world?
Well, I think policymakers are desperately looking for ways to promote increased domestic production, right? To fill what we know is going to be a void in the international market with commodity production. We know that Ukraine and Russia are significant suppliers and exporters of wheat and corn and some of our key commodities. And so I think policymakers, in a well-intended manner, are looking for ways to incentivize and increase, how much production we have here. But I think the fact of the matter is the market's going to take care of that. If you're looking at commodity prices right now, the market's going to take care of that. And if you're a farmer in a position to be able to produce more, you're going to do it right now because it makes a lot of economic sense to do so. The particular proposal that was rolled out, a little more than a week and a half ago, was twofold. One, to provide increased loan rates, so those federal loans that farmers can take out to borrow on operating loans, for example. Increase the loan rates associated with the commodities that are attached to those loans. Basically in an effort to give farmers more liquidity this fall to pay for inputs in the thought that if they have more liquidity, they can pay for those inputs, they can increase their planting, winter wheat planting, for example. One of the pitfalls of that is the way that loan program works is when you get to the fall and you take out one of those loans, you essentially have to hold your grain as collateral against that loan. And so if we're talking about trying to move product into the supply chain as quick as possible during harvest this year to meet the supply chain needs, it's almost counterproductive there because you have to hold those until it's collateral on those loans. So not sure that is going to help a lot in terms of pushing more commodities into the global marketplace right away. One of the other potential pitfalls is if you have commodity prices collapse, you have liquidity that's been loaned out to farmers based on inflated commodity prices. There's a disconnect there, and there's going to be some vulnerability there as well. So there's some pitfalls, I think, to that. The other piece of that proposal was to provide a $10 per acre crop insurance premium discount for any farmer who double cropped soybeans next growing season into their wheat production for this winter. So, I'm a farmer. I plant winter wheat this year, and I double crop soybeans into it in the 2023 growing season. They would qualify for a $10 per acre crop insurance premium. I think it's well intended. Again, I think most ag economists who have looked at this say, I'm not sure how much that moves the needle in the grand scheme of things. Probably does some, but you got to think about, if I'm an Ohio farmer, I'm not set up to plant wheat. I don't have a wheat planter anymore because it's been a decade since we planted wheat on our farm, for example. Are we picking winners and losers then as well? Because some farmers are better positioned to take advantage of that than others. There's always that dialogue that happens. So We do know that this would take action by Congress to implement both of these proposals. In the Ukraine supplemental package that is being debated right now in the halls of Congress, they have not included this proposal in that piece of legislation. It seems like maybe the appetite on that has been kind of cool from members of Congress, so we'll continue to watch this. But I think it's well-intentioned stuff, but I'm not sure that this moves the needle in terms of what we need to do.
Yeah, the first proposal was for $500 million, and as of yesterday, we found out this is simply not going to be included in anything coming up legislatively speaking. They're going to find other avenues to try to get this done, if in fact they can get it done at all. Some good news for our livestock producers as well. Some changes on the livestock marketing front.
Yep, absolutely. So RMA announced just last week they're making changes to 3 very important programs for our livestock producers. The Livestock Risk Protection Program, the Dairy Revenue Protection Program, as well as the Livestock Gross Margin Program. So these are 3 really important programs. Here in Ohio, talking about the impacts, our dairy industry has been struggling. And one of I think the Dairy Revenue Protection Program has been a great insurance tool for our dairy producers to utilize, but it has had a hang-up, I think, in the past, where if you were a farmer that suffered from some sort of disaster or destruction on the farm, so say you had a barn fire and destroyed the barn, maybe lost some cattle, lost some dairy cows, you were kind of precluded the way that program was set up from being able to continue to use that program if you had a situation like that happen. One of the changes that RMA has made is to allow dairy producers to continue to participate in that program if you suffer from an event like that. I think that's a hugely important change, just more flexibility for our dairy producers, which is important. On the Livestock Risk Protection Program, one of the things that I think is really important under that program is they are increasing the total head limits under that program. So for both fed cattle and feeder cattle, they're moving those head limits up to 12,000 head per endorsement, or 25,000 head per crop year. And for swine producers, those limits are going up to 70,000 head per endorsement, or 750,000 head per crop year. So just providing more flexibility, a more robust program, quite frankly, for our producers there. So I think that's really important. And then finally, on that Livestock Gross Margin Program, they're expanding that program to all 50 states. Now, Ohio has been a state that has benefited, has been one of the qualifying states to benefit from that. I think we're happy to see producers from across the country be able to qualify for that program. I think the important thing for Ohio producers, though, is that a new requirement that RMA has put in place in these series of reforms is they're moving the indemnity payment that crop insurance companies that the insurance companies are required to pay from a 60-day window down to a 30-day window. So they're going to be required to make payments much closer, those indemnity payments much closer to the claim. I think that's really important, to be more responsive to the farm economy, right? To be able to get that cash in hand for those indemnities sooner is going to be really important, particularly in an environment like we're in right now for our livestock producers.
As we wrap up, I never thought you and I would talk this much about pesticides, but here we are. We had that enlist ban earlier this year from EPA that we got overturned in Ohio for those counties that were impacted. Now we're looking at pesticides and control of pesticides at the local level. There's some legislation in Washington dealing with that issue.
Yeah, this is something that our policy absolutely supports. There's a bill, HR 7266, which would prohibit local governments from having regulatory measures more stringent than the state and federal restrictions and regulations on pesticide application. And I think that's incredibly important in an era where you talk about enlist, and that was something that was rolled out at the federal level, but the county bans that were going to be in place here in Ohio, we had farmers talking about one side of the road, my farm, I'm able to apply this product. The other side of the road, I'm not able to apply this product. If we start having local governments put in place more stringent restrictions and regulations than what this really robust process at the federal and state level. Remember, this is a partnership between federal and state agencies here. If you start to have that happen, you talk about a patchwork that would be impossible to manipulate or to maneuver around for farmers. I think this provides a lot of clarity at the national level, clearly identifying US EPA, and those state agencies are identified as the main regulators, partner with the US EPA to be the one to set these standards. I think it's appropriate, it's scientifically based, and it gives us one area to focus on, right, as an industry, to have that conversation about what's appropriate, what's workable for agriculture. You can't have a patchwork of local ordinances all over the place with different standards. It's just not going to be workable for the U.S. food supply to have that consistent framework for how they operate.
Brandon Kern is the Senior Director of State and National Policy with Ohio Farm Bureau. I'm getting limbered up now. You've got to take that race. You're going to try to do your best Lucky Strike impersonation up those stairs?
Yeah, in the spirit of...
I have my running shoes on.
Of the Kentucky Derby. I can't wait to beat you. We're gonna race?
Yeah, we're going to go up the stairs. We're going to do our best Rocky impersonation.
I thought we were going to do a couple laps around the State House.
God, no.
No? Just...
half a lap and I'm done, so no.
All right,
give it a shot.
Up the stairs.
That's lunch.
Rocky style.
Lunch is what we're betting here. So
lunch.
Yeah.
All right.
Let's go.
Let's go. I can take that weight.
You really think you can beat me up these stairs?
Oh, most definitely. You're like an 18-1 on.
You gonna pull your best Lucky Strike on me?
Oh yeah.
That's Brandon Kern. I'm Ty Higgins. This is Ohio Farm Bureau's Policy Points. On your mark, get set, go.